The consumer price index was reported earlier today, and the results, well, they were mixed. In fact, lately, it seems the economy is moving in several directions at the same time. And this is leading to a chaotic and non trending stock markets. Here's a great example. What's been reported: core CPI rises less than forecast as inflation pressures ease. Or inflation rose to a 5-month high in December. What that means for the Fed rate cuts. Which one of these is true? Well, actually, both. Consumer prices, they're on the rise. It was reported today on a year over year basis. CPI rose at a rate of 2.9%. This is the fastest rate we've seen since July of this past year. So inflation is certainly on the rise. We look at core CPI, that's a little cooler. Core CPI excludes the more volatile components like food and energy, and that rose at a rate of 3.2%. Now, if you read the headlines, I'll tell you inflation's cooling. It's not cooling, it's at 3.2%. We've hovered between 3.2 and 3.3 since June of last year. So this is just the lower end of a 7-month range. It's not cooling per se. In yellow, CPI. In blue, core CPI. And the interesting trend is that we're seeing a little bit of strength in the energy markets, which is leading to that increase in CPI versus core CPI. But nevertheless, you take out a very weak energy market, and the core CPI, which is a basket of goods and services, everything else except for food and energy, and that's still very much high. Now, here's a phenomenon we spoke about yesterday. Wholesale prices, they're rising a lot. Wholesale prices are reflected by the PPI. We spoke about this yesterday. The consumer prices, which we're speaking about today, they're rising, but not as fast. So when raw material prices rise faster than what the business can charge the consumer, profit margins are being squeezed. We say all this with a backdrop. Think of what the ramifications are to the stock market. Now, here in blue, this is CPI minus PPI. We spoke about this yesterday, but we have a development. We now have, as of today's data, 3 months in negative territory, where the CPI on a year-over-year basis is below, is increasing at a slower rate than raw materials. Raw material prices are going up faster than what the consumer is able to afford. And again, this is not good for profit margins. In yellow, CPI on a year-over-year basis. In blue, PPI. And this is just another way to illustrate. For the first time, this crossover is actually very interesting. First time in a long time, the change has really taken place. The past 3 months have shown a change in the trend. That's not good for a lot of stocks. Speaking of which, again, think of all this in terms of earnings and stock market performance. Now, these are the different components measured inside CPI. The component that has increased at the fastest rate compared to this time last year, airline fares, up 8%. Number 2, and number 3 actually, owner's equivalent rent. Rent is still on the rise. And followed closely behind that, overall shelter prices. There's a little bit of nuance in the way shelter prices and real estate prices are reflected in the CPI, but nevertheless, these represent really the top of the CPI number. What is what is going up by the most, except for, of course, airline fares. At the bottom of the list, fuel oil on a year-over-year basis down 6%. Followed by gasoline, down 3%. And then followed behind that by used cars, also down 3%. Now, kind of makes sense that when used car sales are down, there's less consumption of gasoline, and therefore then gasoline and fuel oil prices also go down. There really is a big kind of polar dynamic within the consumer price index. Here in blue, speaking of which, gasoline. In yellow, used car on a year-over-year basis. And the correlation is very clear. And we can use this to our advantage. Think of when we're approaching earnings season, think of those stocks that may benefit from higher inflationary pressures like shelter and airline fares, as opposed to the ones below zero, like gasoline, for example, fuel oil, used cars, things of that nature. As a reminder, if you haven't already, please visit our Just the Data Substack newsletter. We have begun to trying to post nearly on a daily basis, new ideas for projects, but also observations about the stock market and a lot of other fun stuff. So we this will be if it's available for free. We'll provide a link for you in the description of this video as well. We hope this has been helpful. We look forward to seeing you back soon.